Hi, it's Ben. The world is going crazy. I'm talking countries in lockdown, schools are closing, people everywhere are panicking. The story is the same every time there's a crisis. People panic and lose their minds. But not you. You're too smart for that. You've positioned yourself in a position of power, one where you're able to take advantage of whatever situation life throws at you. That's why these strategies will work anytime there is fear and panic in the general population. So today we're going to be running through a few methods that is going to help you make millions, not only from the coronavirus market crash, but any recession causing crisis in the future. By having the right finances in place, I was able to take advantage of shortcomings in the marketplace in order to continue to grow my business. Let's first break down why a market crashes and what is currently going on with the market. Our economy has seen incredible growth over the last decade. Everything has been up and up and up. Until recently with the coronavirus, and now it has all come to a sudden screeching halt and has begun to crash. When people are confident in the future, they tend to be less frugal with their money. They go out and spend their money more freely. This consumer spending causes corporations to earn a lot of money. And when corporations are earning a lot of money, they try to expand so that they can take advantage of the situation. Now, this expansion causes an increased demand in production, and workers are required to meet the demand of this production. This creates more jobs, which creates more people spending money. And this snowball effect continues on. But this is a fragile state. When consumer confidence in the economy fades, they quickly tend to spend less money. And as they spend less money, corporations earn less money. And when they earn less money, they begin to quickly downsize and lay people off. This causes unemployment to rise, which causes, once again, another cycle, this time in the downward direction. We are currently seeing a breakdown on a massive scale of the current economic situation, partially due to the coronavirus itself and partially due to the panic caused by the mass media. Contrary to what the media might say, this is not the end of the world. You see, the media is not interested in the news, or even the truth for that matter. The media is a business, and like every other business, they have only one goal: to make money. So by creating sensational headlines that people will pay attention to, they're able to generate more revenue from advertisements. Their main goal is not to report the news, but rather to report on something that people will pay attention to. And nothing causes an engaging audience quite like fear does. That's why you hear stories about shortages of medical masks, but don't hear stories like this one about the New England Patriots sending its team jet to deliver 1.2 million N95 masks. But regardless if the information is true or not, it does cause a panic in the general population. On top of this, there are huge disruptions in the supply chain. Big companies like Amazon and Apple heavily rely on these items that are imported from China, and this causes a trickle-down effect. This disruption in the supply chain is why you have seen so many empty shelves at Walmart. I never thought that toilet paper would be such a hot commodity. I mean, who needs 1,000 rolls of toilet paper? How many are you planning on taking in the near future? But as people panic, they want to protect their hard-earned investment, and so they immediately begin to sell shares of whatever stocks that they own. And as more and more people sell their stocks, this once again causes a downward spiral in the price of those stocks. Now, the biggest takeaway in all of this is that fear is the number one enemy of the stock market. But it can also be your number one friend. As Warren Buffett famously said, be fearful when others are greedy, and be greedy when others are fearful. So be greedy. Put yourself in a position of power. That way, when others around you begin to panic, you are able to calmly take advantage of the situation and grow your business. So let's get to it. Let's start preparing. Number 1, reduce your spending and build a safety net. Be frugal. Be stingy. Put it all towards building a safety net. This is easily the most important thing that you need to do with your finances. This safety fund should consist of between 3 to 5 months of living expenses and should only be used in cases of an extreme emergency. This emergency fund is your safety net. It is going to protect you when the economy is in a free fall. And since you have this safety net, you need not worry about all those items that other people are worried about. While they're busy panicking and worried about how they're going to pay their rent, their mortgage, or buy food, you are able to focus on the big picture. When you don't have to worry about day-to-day items like rent or food, that allows you to focus more on the bigger picture on how you can grow your business. And unlike the rest of the world, your decisions are not going to be based on fear. Number 2, index funds. Now that you have your emergency fund set up, you are able to invest a little bit of your extra money in an index fund. These index funds are one of the safest long-term investments that you can make, especially in today's economy during a crash when the market is significantly undervalued compared to its historical past. Now, index funds are comprised of many different companies, and as such, their value can go up or down. Now, currently the market is down dramatically because people are scared and they have begun to sell. Now, this creates a perfect buying opportunity because items that were once significantly priced higher are now much more attainable. Now, I'm no Nostradamus, but I am confident when I say that at some point in the future we will find a cure or a vaccine for coronavirus and things will begin to go back to normal and the prices of the stock market will start to return back to normal. And when that happens, the economy will slowly begin to come roaring back to life. The market will not stay down forever. But that does not mean the economy will come back immediately. As a general rule of thumb, I do not suggest people invest their money in the stock market that they foresee themselves needing within the next 5 years, whether that's coronavirus or just investing in general. Plus, by not investing money that you believe you will need within the next 5 years, you are in a better position to weather the emotional storm. If the market continues its downward trend and your investment begins to lose a little bit of money, you are not going to suddenly panic and sell for a loss. You are able to instead invest for the long term and ride out this pandemic. So buy now when the market is down. And if the market continues to drop tomorrow, then buy even more. The main thing is do not panic if at first you begin to lose money. Remember, you are in this for the long haul, and over time you will make money by investing in index funds. Number 3, sell shovels. There are 2 different types of entrepreneurs, the gold miner and the guy that sells shovels. The gold miner, these are the guys that go out and search for the money. They go out in an endless search for riches. They try to invent a new product, system, or idea and bring that idea to market. Now, some gold miners will get lucky and find a vein of gold. They'll strike it rich. But during the California gold rush, only a very few select gold miners actually got rich. The real wealth was not in mining the gold itself, but rather selling overpriced shovels and supplies to all of these starry-eyed gold miners. So the second type of entrepreneur is going to be the shovel seller. This is the guy that supplies the gold miner with all of the tools and necessary items for the gold miner to go out and do his thing. Now, the great thing about being a shovel seller is that it doesn't matter if the gold miner actually finds gold or not. The only thing that matters is he needed a shovel in order to go search for his gold, and you were the one to provide the shovel. So in this case, it doesn't matter what the outcome is. It doesn't matter if the economy is doing great or poorly. The only thing that matters is there is a demand for shovels. During the gold rush, Levi Strauss sold clothing apparel to these gold miners. Henry Wells and William Fargo provide banking services to these miners. By not following the hype, these men were able to create financial empires. Remember, when the entire world is zigging, that is when you need to zag. This is important because in the current crisis, it is causing demand to start to shift, which is creating opportunities in new areas. So as soon as you are able to create and sell products that allow other businessmen to go out and mine for that gold, that is when you will be on to a winner. Number 4, invest in real estate. If you have extra cash, you should definitely consider investing in real estate. Over the course of mankind's history, no other asset class has come anywhere near creating as much wealth as real estate has. This is a long-term strategy. But since this was a long-term strategy, who cares if the current crisis causes a temporary drop in the price of a home? You weren't interested in selling it anytime soon anyway. As people who are unprepared for the crisis begin to panic, they may be in financial distress and may be in a position where they need to sell their home. Now, large populations of people who need to sell their home is likely to cause the price of homes to drop. But this is a fantastic thing if you are the one doing the buying. This causes a unique situation where you are able to swoop in and pick up property for an unbelievable price. And unlike other types of assets, a bank is eagerly willing to go out and give you a loan for real estate. I mean, try going to Wells Fargo and asking them for a loan because you would like to use that money to play in the stock market. It simply won't happen. By leveraging other people's money, it reduces the amount of upfront capital required and thus increases your rate of return. If a stock goes up by 3% annually, then you made 3% profit. But if a house appreciates in value by 3% and you only needed a 20% down payment, then you made a 15% return on your investment. Leverage. Number 5, buy an individual stock. Now, this technique is obviously the most risky technique, and that is why I have saved it for last. I'm not usually too keen on investing in individual stocks as the risk is relatively high and you could theoretically lose a lot of money. However, if you believe at some point the market will return to its previous highs, then you are able to take advantage of the situation of some of these stocks that have been hit abnormally hard during this crisis. Airline companies have been some of the hardest hit companies in the industry. A lot of these stocks are currently trading at a mere 25 to 33% of what they were trading for only 3 months ago. However, at some point, I believe the economy will return to a fully functioning economy. And in order to do that, one of the things that must happen is transportation. And these airlines provide a crucial means of transportation, not only for people, but for products as well. Therefore, I don't believe that under any circumstance the government will allow these airlines to go bankrupt. I believe they will continue to give them loans or grants in order to keep them afloat. While this strategy is risky, it is okay to take a little bit of risk every now and then, as long as you can truly afford to lose any of the money that you invested and will not immediately start to panic at the first sign that things are not going your way. So zig while others are zagging. Buy when others are selling. And when the economy does finally come roaring back to life and you start to hear all of your friends and coworkers talk about how much money one particular industry is making, then that's probably the point where you need to start selling in that industry, because nothing can cause a stock price to become inflated as much as hype does. In the months leading up to Canada legalizing their marijuana, the stock Tilray spiked in price from $24 all the way up to $150. Leading up to the legalization of marijuana, everybody was talking about investing in marijuana, and this hype fueled a continually perpetuated increase in stock. Like I said, it went all the way up to $150 in only 2 short months. But when everybody is talking about a particular product and how amazing it is financially, that should be your number one clue that you need to get out while you can. As you can imagine, the stock price of Tilray has been in perpetual free fall ever since, and is now trading at roughly $6 per share, or a 94% drop from its all-time high. So remember, a huge disruption to the economy can cause a lot of financial pain, but it also provides a lot of unique opportunities to those who have positioned themselves into a position of power and are ready to take action. As Baron Rothschild once said, there's money to be made when there's blood in the streets. So act decisively, take action. And when the economy starts to finally rev back up, your competitors are going to be the ones playing catch up. This is a golden time for growing your personal wealth and investments. Now, if you like this video, be sure to give it a thumbs up for the YouTube algorithm. And as always, consider subscribing to the channel that encourages you to earn more, spend less, and invest the difference. So what are you guys still doing here? Get out there and start making some money.